You think investors are ignoring you? They're not. They are filtering you out. And most of the time, you don't even know why. You're posting deals, people are watching, they say they're interested, and then they disappear. This is not random. It's the signal you are sending. And every time you miss this, you're not just losing investors, you're losing deals you should have already closed. Because here's what's actually happening: investors are deciding what they think about you before you ever get the chance to explain yourself. And they do it so fast, sometimes in 10 seconds. That is why some people post deals and get momentum, and other post better deals and get nothing. That is not luck or random. And it's not always the deals. Investors are making a decision about you. I have raised private capital to manage over $150 million in real estate. And after sitting in enough real estate conversations, one thing became very clear. Serious investors run three filters before they ever talk to you. And I'm not here to impress you, I'm here to show you what actually moves capital. So, in the next few minutes, I'm going to break down the three filters, show you exactly how they work, and how to fix what's making people hesitate. So, you stop being overlooked and start becoming the kind of person serious investors take seriously. And stay with me, because by the end, you will know exactly what to correct and exactly what to do to turn that correction into momentum. The first filter: clarity. Can someone understand what you do in 10 seconds? If not, you're out. Not later, immediately. And not because your deal is bad, because you are unclear. And unclear in investors' mind, it feels like risk. Let me give you a more sophisticated way to think about this. I love this guy. His name is Howard Marks. He talks about this all the time. Risk is not what shows up in a spreadsheet. Risk is what you don't understand. And when you're unclear, you're not just hard to follow, you're creating unknowns. And unknowns are where investors lose money. So when someone hears you and thinks, I'm not fully sure what this is, they don't ask for clarification, they just step back. Because serious investors, they don't get paid for guessing, they get paid for understanding. And if they don't understand you, they can justify the risk. It's hard for them. So they say, I pass. Now, let me show you what this look like in real life. This is how most people sound. We invest in opportunities that blue, 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 blue. That means nothing. It's vague, it's soft, and it tells me you have not made a decision. Now, listen to this. We acquire underperforming extended state assets in emerging markets and reposition them to serve long-term workforce demand with a stable, predictable cash flow. Clear, specific, easy to understand, and most importantly, it feels real. Because here's how investors think. If I have to stop and figure out what you mean, I'm already gone. Because confusion creates friction, and friction kills deals. So this is not about being more detailed. It's about being more decisive. Clarity is not more words. It's fewer, better ones. Here's where these get deeper. When you are unclear, you're not just confusing people. You're signaling something. You're signaling, I don't full on this yet. And investors pick that up instantly. Not consciously, but they feel it. And when they feel that, they don't lean in, they step back. But when you're clear, you don't sound like you're trying to convince anybody. You sound like you already have decided. And that changes how people experience you. You stop feeling like what I call an opportunity and start feeling like someone they can trust with capital, a capital leader. And that is the shift, because clarity is not about sounding smart. It's about removing doubt. And the moment doubt is gone, decisions get easier and capital starts to move. Filter number two: credibility. Do you look real or do you look early? And investors can tell fast, really fast. They're looking for signals, not perfection, signals. Things like track record, clear thinking. So you don't need to be the biggest, but you do need to be believable. Because if you don't look credible, you're not even in the game. You're just noise. And credibility is not what you say, it's how you say it, it's how certain you are. It's how little you need approval. It's not about being the louder in the group, it's about being grounded, clear, unshaken. And when you speak like that, you don't chase capital, you attract capital. Now, if you're realizing, okay, I see the problem, but I don't really know how to fix it, that's exactly why I create this. It's called the Raise Rapid Method Masterclass. And inside, I break down exactly how to position yourself so you pass these filters automatically, how to structure your message, how to lead investor conversations, and how to move from interest to actual capital. Because knowing the filters, that's a step number one. But knowing how to use them, that's what changes your results. So if you're serious, go and click in the link below and sign up. Here's the third filter: relevance. Do you match what they are actually looking for? Because here's the truth: not all capital is the same. And this is where most people lose. Not because their deal is bad, it can be a great deal, but because it doesn't fit what they're looking for. Different investors want different outcomes. If you're talking to family offices, they want more preservation, consistency, protection. Syndication investors, they want clarity, structure, predictable returns. But if you're talking to venture capital, they want upside, speed, symmetry. And if you show up with the wrong message to the wrong investor, you lose. Even if your deal is good, because good is not enough. It has to fit, it has to align. And a lot of people don't take thinking time to define this. Most people don't have a deal problem. They have a matching alignment problem. So you're not being rejected, you're just being mismatched. It's like dating with the wrong person. What happens? You get the same response. This looks interesting, but it's not for me. And you hear that over and over and over again. And if you don't understand this, you start questioning your deal. When the real issue is your positioning. The wrong audience will make the right deal look weak, and the right audience will make it obvious. Because when alignment is there, you don't have to push, you don't have to sell, you don't have to convince, you don't have to over explain. You feel it, they feel it, and that conversation changes. The moment you align, you stop selling and you start being chosen. And that's when capital moves. You start attracting the right people, the right capital, the right conversations. And when that happens, you stop being a capital chaser and you become a capital leader, which means investors come to you. So let me make this simple. You're not being ignored. You're being filtered. And those filters are happening before you even get a chance to speak. If things are not moving, it's not random, it's structural. Remember, clarity, credibility, relevance. And if you fix those three, everything changes. You stop trying to prove yourself, you stop trying to explain things over again, and you start attracting those investors to you. You start leading, having different conversations, because capital doesn't respond to effort, it responds to certainty. And once that is in place, opportunities don't feel forced, they feel obvious. But this is where most people get stuck. Because even if you fix your positioning, if you're still showing up in the wrong places, nothing changes. Access without alignment doesn't convert. So if you understand this, the next step is very simple. You need to know where serious investors are actually paying attention, not where beginners are looking, not where attention is low, but where capital is quietly moving. So I invite you to watch this next video where I break down exactly where to find them and how to position yourself in those rooms so when they look, they see you. Because the goal was never to find investors, it was to become someone they're already looking for.